the key differentiator in all of this is finally the numbers have brought to bear what the company had envisaged for a long time, that this would be a very low cost, low risk operation. We've achieved one of, and I think in fact actually the lowest capital intensity of a major copper project in the development pipeline.
Hello to those tuning in to the Assay TV, where today we're catching up once again with Hot Chili, more specifically the Managing Director and CEO, Christian Easterday. Hot Chili are focused on rapidly advancing their flagship Costa Fuego project, which is a consolidation of the Cortadera porphyry gold deposit and the Productora copper gold deposit in Chile. Okay, so welcome Christian, thank you for joining us again on the Assay.
Hi, great to be with you, Katie.
So it's been a little while since we last caught up, so can you just give our viewers a quick recap of Hot Chili, kind of its journey and its flagship project?
Yeah, great, Katie. Well, I've been the Managing Director and CEO of Hot Chili since we founded the company and listed back in 2010. Back then we were very interested in finding and developing a large copper project on the coastline of Chile, had some great success, and through this journey have now got to a position where we have consolidated a major land holding on the Chilean coastline with an established near billion-ton resource that we've just recently completed for the first time a combined development study, or a PEA, and announced the scale that Costa Fuego and Hot Chili will be bringing into the future supply for copper. So a great set of announcements, which no doubt we'll chat about.
Yeah, exactly that. So let's talk about the PEA. Can you give us some of the numbers and some of the details of that, please?
Yes, well, as I mentioned, this was a combined open pit and underground assessment on what is effectively a grouping of very large copper deposits that all sit next to each other and straddle the Pan American Highway at very low elevation in Chile. And we looked at a combined operation through central processing, and that has really produced some very stunning numbers. Firstly, I guess, on size. We had a number of objectives moving into this PEA, and one was about the ability to make this a very meaningful project in terms of the scale of copper production. We've been able to do that. We've confirmed a 95,000 tonne per annum copper production profile, as well as 50,000 ounces of gold over a 16-year mine life, with that as the primary production period. That has generated very strong economics, a 1.1 billion US NPV after tax, 1.54 billion pre-tax, but most importantly, I think the key differentiator in all of this is finally the numbers have brought to bear what the company had envisaged for a long time, that this would be a very low cost, low risk operation. We've achieved one of, and I think in fact actually the lowest capital intensity of a major copper project in the development pipeline. And that is purely out of the advantage of low elevation, no requirement for an expensive saltwater or seawater pipeline into the high Andes, and no requirement for desalination because our ore bodies process a little bit better with raw seawater. So that has left the capital at US 1 billion to build this thing, but generating near on 112,000 tonnes of copper equivalent production a year. So you can think of this as almost a super boosted revenue profile project, some 850 million US a year in revenue, 3.3 billion US in free cash flow. And what we're very, very happy to see is that these numbers were generated extremely conservatively. We put 20% contingency across all capital, and we've applied $3 per pound as the long-term copper price for our resource estimations, $3.30 a pound for optimizations, and running this in line with 27 bank forecast for the copper price assumption we've used, which is $3.85 per pound long-term. So what this does is it generates a huge amount of leverage to what we feel will be the coming thematic of future-facing metals, and that will be the onset of the re-rate of the copper price. Too few projects, very few at this scale available to potentially hit production by 2030. So extremely meaningful globally.
Excellent. So you certainly sound like it's a robust PEA. And what are the next steps then? Are you moving towards a PFS?
Yes, correct. So we've outlined a very clear pathway through to financing over the coming years. We have a pre-feasibility that we put on ice and put on pause late last year after advancing probably about 80%, I say, on our work streams. So that's something that we'll be taking off the shelf and completing in the second half of next year. But on the lead up to that, and in line with the other announcement that we put into the market at the same time, which we'll talk about shortly, we're fully funded to go after the opportunity to upscale this further and extend the mine life well past 20 years. So that would certainly put this project not just one of the front runners to near-term production, but most importantly, one of the largest outside of the majors.
You just touched on it, your second big announcement, which is obviously a significant investment from Osisko. What does that mean for Hot Chili? Obviously, well funded for the next few months, but can you tell us a little bit more detail?
Well, first and foremost, it's a binding agreement that we've signed with Osisko Gold Royalties. We expect that to close in the coming couple of weeks, and then following on from that will be fully funding us for the next 12 to 18 months to kick off a 30,000 metre drill program across our growth targets, feeding into a resource upgrade and then into a pre-feasibility next year. But most importantly, the ability to submit our environmental impact assessment next year with a scale that we feel is appropriate. And we see a lot of opportunity to upscale this project. And this is I guess, a funding which has facilitated that. It's a significant endorsement from one of the leading gold royalty and streaming groups of North America. So fantastic to have that endorsement alongside the endorsement we already have with Glencore as a 9.9% shareholder. So I guess importantly, it provides funding first and foremost, as you've asked, but I guess the terms of the royalty agreement where we considered something that firstly left us with a very clear see-through value, 1.1% royalty across all of our payable metals on Costa Fuego for a $15 million US check when our market capitalization is currently 80 million. So I think the value equation demonstrates that the PEA numbers are very real. And I think another differentiating point with the royalty is this is something that is not backstopped by Hot Chili needing to be in production by any particular date and receiving penalties thereafter. This has also significant buyback rights in it to reduce the royalty to half up to 4 years post-closing, triggered by change of control. So what it does is it really puts the value of the project to work rather than the current market capitalization of Hot Chili's share base. And we've avoided the requirement for share issuance, which significantly reduces the dilution to our shareholders on this transaction. And I think that our lawyers reminded me that it's been many, many years since the ASX has seen a royalty funding arrangement. So it's I guess the early stages of Hot Chili being able to utilize all of that fantastic optionality my chairman, Nicky Adshead-Bell, discusses. And we're very, I guess, fortunate to have precious metal credits available to the company, offtake available to the company, and most importantly, probably a project which is going to be highly desired within the coming years.
Excellent. Let's look at the energy transition in a broader sense. Costa Fuego's emerged at quite an interesting time. The markets have been crazy over the last few months. How do you see copper prices panning out? I know we're due to enter a deficit as we head towards 2023. Do you see them going up still, or do you see it evening out at all?
Yeah, and look, you can always focus on where it's eventually going. I don't think that there's a lot of disagreement given the world's targets for decarbonisation and net zero. So look, copper is going to be a huge beneficiary of that. And I think in the short term, the end of this year is interesting. We'll see whether a stock out happens, but with dangerously low stockpiles, I think that there's always that in the background, but ultimately it is really it's almost an unstoppable force. And when the world needs to electrify and you've got a synchronized push towards electrification, if that is going to be driving conservatively 7-8 million tons of additional demand by 2030, you're asking the copper market to increase production and supply by 30-35% in a matter of 7 or 8 years. And we know there's been very few major copper discoveries of the past 20 years. We're holding one of them, so we know that well. But when you can only add up, on two hands, sizable projects in the pipeline that can impact production by 2030, and by sizable, I mean plus 100,000 tonners, and maybe 15 if you're lucky, talking about 40,000 ton projects, you've got a bit of an issue. So I think that there is an elasticity built into the copper sector, and that is going to translate into significant incentive pricing for there to be a huge amount of investment into copper to produce that supply. But news alert, even if that happened today, you would see the impact of that in 10 to 15 years at the earliest.
Absolutely. Okay, just to round things up then, as a summary, what can investors look out for in the next 12 months?
Look, we will be outlining a very clear strategy going forward to meet our catalyst timelines. So as I said earlier, drilling kicking off in the hopefully in the coming weeks once we've closed the Osisko investment, and then followed by a resource upgrade later this year, and then moving into next year into the pre-feasibility and the delivery of our EIA. That's our 12-month to 18-month forecast. And what that has us positioned for is a definitive feasibility and decision to mine in and around 26. And that's a very, very important marker in the time frame of where things are going with copper. We expect that the prices will probably be higher than where our long terms are. And we know that this project, with a 50% increase in copper price, will deliver a tripling of NPV and a doubling of IRR. And if we're in that fortunate position, then I guess even the capital on a very large project like this, that's very cheap to build, it's still large, becomes a fraction of the potential value in Hot Chili share price and market cap. So we're looking forward to this, hopefully getting the right timing and delivering, hopefully, an optimal and larger project.
Well, thank you so much for joining us today. We can't wait to catch up again when I'm sure you'll have tons more exciting news, and speak to you soon.
Thank you very much.